Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering the best dividend stocks going ex-dividend December 3rd through the 7th, 2018. So if you're brand new to my channel, I do make stock market, dividends, personal finance, real estate investment videos every single week. So consider subscribing, and if you do have any sort of suggestions over topics to discuss, let me know in the comment section below. I always appreciate reading all of your guys' comments, and I reply to you guys all, so I always reply. And if you haven't yet, check me out on Instagram. I am starting that up, trying to post out every Monday, Wednesday, when I do have a little bit of time in there. So let's go ahead and get into it. Are you guys looking to add some new dividend stocks to your portfolio, or just looking at some fun dividend stocks in general? Well, I posted over on my Facebook page here that we had 5 stocks that were the winners here, which we're going to be covering the article, but we had also 5 runner-ups. Now the runner-ups, these were all sorted by how long they've grown and paid out a dividend. So the winners here had been growing and paying out their dividend the longest, versus some of these runner-ups here did have between 5 and no years of dividend growth. So that is available there on my Facebook page. Now this week's we're going to be discussing ticker symbol AJG. This is the Arthur J. Gallagher. We are going to be covering ticker symbol CASS. This is the CAS Information Systems. We're going to be covering ticker symbol CHFC. This is the Chemical Financial Corp. We are going to be covering FRME. This is the First Merchant Corp. And then ticker symbol GPC. This is Genuine Parts Company here. So all these 5 stocks we're going to be covering. Now, I started initially with 100 stocks, knocked out anything that had a starting yield below 1.5. I then knocked out anything that had not had a rising revenue, net income, free cash flow over the last 5 and 10 years. Next, I eliminated any stocks that had a forward PE that was greater than their current PE, meaning that their next year earnings were expected to go lower, or expected to stay flat, or they're expected to not grow. They're going to be growing their revenue or their earnings, but it just wasn't going to be making an impact and causing their PE ratio to actually increase, meaning that they're not going to be as profitable as we were currently. They've set their forecast as being going into the negative a bit. So all of these stocks here in today's video have grown their dividends for at least 5 years or more. One of them having grown their dividend for the past 61 years. So in the article, we're going to be covering the dividend dates, the price comparison to the yield, the PE comparison to the industry, the S&P 500, and the payout ratio, dividend history, and a few other items. I do have a few referral links. If you sign up for M1 Finance before the end of November, which is the very end of this week, you and I both get $20. Robinhood, it's there. They don't offer Roth IRAs. They don't offer partial shares. They do offer free trades. So if you're looking to take advantage of free trades, partial shares, you can invest in single stock allocations, ETFs, and you get a little $20 bonus there. Check out M1 Finance. Otherwise, continue on there. So I do have 2 free apps on the Google Play Store called the Simple Dividend Calculator. I'm working on updating this one currently, adding in an average price change per X amount of years, and then a dividend increase percentage by X amount of years. So as you go along, stocks don't always remain the same. Some stocks have an average increase of 4%, 7%, 10%. So going into the future update, I'm going to allow the price to fluctuate year over year. That way, over the horizon of however long you're investing, you can kind of see what your average equity and your dividends would be able to buy back. So that's a big update right there. I'm just kind of working out that math. And then my simple retirement number calculator is basically you enter your current age, your retirement age, how much you want to receive in retirement, and the calculator spits out how much you need to be investing weekly, monthly, or annually in order to hit your retirement goal. So stocks ordered by ex-dividends December 3rd through the 7th, 2018. Number 1, we have ticker symbol CASS. This is the CAS Information Systems. They provide payment, information processing services to manufacturing, distribution, and retail enterprises in the United States. Their ex-dividend is next Monday on the 3rd of December, 2018. If you bought them this Friday or prior, you would then get paid out on the 14th of December. Now, taking a look here, I always like to show their 10-year graphs here. That way you can see here in the red, we have their free cash flow up 113%, their price up 108%. In the orange, their revenue. In the green, their net income. Now you take this over a 10-year period and you divide it by 10, and that's going to give you their average increase over the last 10 years. So for example, the price here at 108%, you divide it by 10, that gives them an average increase per year over the last 10 years of 10.81%. So it keeps up right there with the S&P 500. You can see there are periods here towards the end of 2013 where it did come off, blowing above their 200-day moving average, and you can see how it quickly retreated back to their 200-day moving average, broke below it, and then continued trending on. So this one, it does move steady. You can see here back in 2008 during that recessional period that there was a quick dip here, but they quickly recovered. Into 2009, they did trade a little bit lower up until 2011, it looks like, and then they have traded higher since then. So pretty recession-proof company there. For the most part, you are going to get hit during those recession periods, but this one has recovered through the past one. If you want to take a look at the history prior to 2008, because this only goes back 10 years, you can do that. Now, you could also do the same here with the revenue. So the revenue is in the, orange, so 5.4% on average per year. In the red, their free cash flow, 11.3%. And in the green, their net income up 5% on average per year. So pretty solid looking company there as far as their financials go. Now here on this bottom graph, I like to display their 1 year period. So in the blue here, their dividends, they're paying out per share each quarter. So this stock pays out 26 cents per share. It was just recently bumped up. You can see here back in January, they were paying out a little bit underneath 22 cents. They bumped it up to now 26 cents per share. That puts them at a yield no longer at 1.49, but right around 1.58, 1.6, depending on the day. They are currently trading at $65.74. Their 200-day moving average is $64.99. So you can see here that they did break below their 200-day moving average, breaking below $60 for a few days there before bouncing back. Now traded about $65. Their current dividend yield, again, right around 1.58 after that increase there from 22 cents to now 26 cents. In the dark blue up here is their current PE ratio at a 28.71. In the sort of purple here, they have their price to sales as a 5.63 and price to book at a 3.52. So when charted, it does show the current stock does have a price underneath the current yield. So current yield 1.58, which is right up in here. So this stock could be considered semi-undervalued or fairly valued at this time. The stock is trading above the industry average of 24.2 and above the S&P 500 average currently of 21.89. It does have a payout ratio slightly higher than 60%. It's trading at a 60.8 and has had dividend growth for the past 13 years. Price to book value is 3.52, which is above that 3.0 value where asset-based companies would be considered a deal. This has a price to sale value of 5.63, which is above 3.0, where those sales and service-based companies are also considered a deal. So here, we already kind of discussed their stock, trading at a 28.71 PE for the industry of 24.2. Their current dividend yield, 1.58. Now, if you were to multiply 26 by 4, you would get $1.04 per share each year. Payout ratio, 60.8%. 13 years of dividend growth. Over the last 10 years, they've grown their dividend at an average of 16.6%. Now, back in 2005, they did freeze their dividend, and they also did a stock split, I believe. They did a 3-for-2 stock split back in 2004, 2005, somewhere around there. They did have a bit of a pullback for just a minute while they did the stock split, and then they started increasing it again. So check that out if you guys are interested in that. That is ticker symbol CASS. Next, we have ticker symbol GPC. This is Genuine Parts Company. It is a distributor of automotive replacement parts in the U.S., Canada, and Mexico. The company operates in 4 segments: automotive parts group, industrial parts group, office products group, and electrical and electronic materials group. Their ex-dividend is next Thursday on the 6th of December. You'd have to buy this one on Wednesday next week or prior. Hold it until Thursday, and you would receive that payout on the 2nd of January. Here again, over the last 10 years, if you want to take a look at their price divided by 10, you're going to get an average increase there of 15.7%. You can see that it does fluctuate up and down here from 2015 until now, you may have only been trading sideways here. So you may look for these bottoming out points, these support levels here between the years. It doesn't usually break below those support levels there. So that could be an interesting one to kind of look for. If you take a look at their free cash flow at 14.6%, in the orange, revenue up 6.64% over the last 10 years, and in the green, net income at 5.39% over the last 10 years. So good, strong financials there as well. Now moving down into their 1-year graph here, they're currently paying out 72 cents per share, up from 67 cents and some change there. Looks like 67.5 cents back in their last dividend. Now they bumped it up to 72 cents per share each quarter. They're currently trading at $101.94. 200-day moving average is $95.15. So they are trading above the 200-day simple moving average. Their current dividend yield is around 2.78, 2.82, just depending on the day. Their forward PE, their current PE is 20.51. Their forward PE is 18.06. Their price to book is at a 4.1, and their price to sales, this is a sales-driven company, is a 0.81. So when charted, it does show the current stock does have a current price over the yield, which may indicate it could be overvalued at this time. The stock is trading below the industry average of 59.2 and below the S&P 500 PE average of 21.89. It is sitting below a payout ratio of 60%, trading it with a 50.9% payout ratio, and has grown and paid a dividend for the past 61 years since back in 1957. Their price to book value is at a 4.14, which is above that 3.0 value, where asset-based companies would be considered a deal. This is a price is sales driven. It's a sales driven company, which is currently trading at a 0.81, which is below 1, where it would be a 1 for 1, and it's also below 3.0, where those sales and service based companies would be considered a deal. So this one could potentially be at a good buying point. Just looking at the price of sales, you could take a look at the history of that and say, when's the last time it did trade above a 1? Is this pretty normal to trade below 1 there? So stock, again, right around that 20.51, forward PE 18.06. That's way below the industry average, and the S&P 500 there slightly. So again, dividend yield 2.82. If you multiplied 72 by 4, you would get $2.88 there. 144 and 144, yep, 288. Their payout ratio 50.9, 61 years of dividend growth over the past 10 years. While this company has grown and paid out a dividend for 61 years, their 10-year average increase is still very strong at an 8.46%. So their price is also up 15.7% over the last 10 years. So that's a pretty strong, solid company still, for one that's considered a dividend aristocrat. So they've paid out and grown their dividend since 1957. Here we have number 3, ticker symbol AJG. This is the Arthur Gallagher. It is an international insurance broker and risk management service firm. It is headquartered in Ithaca, Illinois. Has operations in 13 counties and does business in more than 100 countries around the world through a network of correspondent brokers and consultants. Their ex-dividend date is on the 6th of Thursday, which is the 6th of December 2018, which is next Thursday. You'd have to buy this one again on Wednesday or prior. Hold it until Thursday, and then you would receive that payout on the 21st of December. This one has some very strong double-digit growth there per average over the last 10 years. So here, price up 21.06% on average per year. In the orange, their revenue up 30.7%. In the red is their free cash flow up 39.7%. And in the green, their net income at 63.67% on average per year. So very strong double digit there as far as price, revenue, free cash flow, and net income there. Moving down here to their 1-year graph, they currently pay out 41 cents per share each quarter. They're currently priced at $76.94. Their 200-day moving average is $70.66. You can see here it doesn't break below that 200-day moving average very often. Even during these tough times here back in February, March, here during October even, it has not broke below that 200-day moving average. You can see the for the most part, you won't be able to buy this dividend yield. The best dividend yield here that it has had is back in January 18th when it had about a 2.4% dividend yield. Currently, you're getting about a 2.11, 2.13, just depending on where that price is for the day. Current PE, 25.14, forward PE, 22.39, price to book, 3.1, and price to sales, 2.12. So when charted, it does show the current stock does have a higher price over the yield, which may indicate it could be overvalued at the time. The stock is below the industry average of 31.7, above the S&P 500 average of 21.89. Payout ratio below 60%. It's trading at a payout ratio of 47.4, and it's grown their dividend for the past 7 years. Their price to book is at a 3.10, which is above that 3.0 value where asset-based companies would be considered a deal. This price to sales at a 2.12, which is below that 3.0 value where sales and service-based companies would be considered a deal. This isn't a financial or an asset-based company. This is an insurance broker. So I would consider this one more of a service-based company. So with a price to sales at a 2.12, that looks, within fair value. So if you were to multiply its payout of 41 cents per share by 4, you would get $1.64 per share each year for every share that you held. Low payout ratio, and they've grown their dividend for the past 7 years since 2011. Now, they did freeze their dividend during the downturn, so between 2007 2008, in that range, they froze their dividend and then continued it in 2011. Over the last 10 years, they have had a dividend increase there of 2.81%. What I believe happened, I think this one actually cut their dividend. And I know when I researched it, okay, those ones cut their dividend. So this one didn't cut their dividend. They just kind of have a very slow rising dividend there. Next, we have number 4, ticker symbol CFR. This is the First Merchants Corp. They provide commercial retail banking services and it operates more than 8 affiliate banks in 65 locations. Their ex-dividend again is next Thursday on the 6th of December. You'd have to buy this one on Wednesday or prior. If you held it until Thursday, you would then get that payout on the 21st of December. Here again, double-digit growth here. Price up 10.1%. In the orange, revenue up 14.1%. In the red, their free cash flow up 36.9%. And in the green, their net income up 58.7%. So double digits there as far as growth there across all their financials and their price. Taking a look here at their 1 year, move here down just slightly. They currently pay out 22 cents per share each quarter per share. Their 200-day moving average is $44.86. They're currently trading at $40.87 here. So they're trading very close to their 52-week low. If you're just kind of looking at the bar, looking to the left here, you can see that there was a period maybe back in April that they were trading right about this level. They actually broke below their February lows in April timeframe, and they could be kind of retesting the support level. This could be a good opportunity to buy. If you research the stock, find it that it has a lot of growth potential. You see its financials are in order. You take a look at its balance sheet. You go over its last quarterly earnings. You can see that, why did the stock go down from, October? Why was it trading at a $48 price point, and why did it drop down to $40? Do you think it'll recover back up to that $45, $48 point? You can see some good upside potential here for this one. This one currently trades at a new dividend yield of 2.15, which does put it at its highest yield available, for the 52-week, for the history of it. So this one's you're getting at one of its highest dividend yields attainable over the last year. Current PE 14.29, forward PE 12.92. Price to sales, 4.98. Price to book, this is a financial, so this is a financial service. So any price to book between a 1.3, 1.7 would be considered fairly valued. So here it's at a 1.49. So when charted, it does show the current stock does have a price underneath the yield, which could indicate it is undervalued at this time. The stock is above the industry average of 13.5. Below the S&P 500 average of 21.89. It is sitting below 60% payout ratio as at a 27.8 payout ratio, grown their dividend for past 6 years here. Price to book again 1.49, which is below that 3.0 value, where asset-based companies would be considered a deal. Price to sales, 4.98, which is above that 3.0 value, where sales and service-based companies would be considered a deal. Here, if you multiply their dividend of 22 cents per share, you're going to get 88 cents per share each quarter. Each year per share. Low payout ratio. They've grown their dividend for the past 6 years. Now, they do have a negative 10-year average increase. So over the last 10 years, they have gone negative as far as growing their dividend because they did cut their dividend during that downturn. I believe they cut it down to just a very small amount, and then they started raising their dividend in 2012. A lot of these financials, JP Morgan, Goldman Sachs, they had a lot of restrictions put on them as far as how much cash they had needed to have available if they could pay out a dividend and so on. So a lot of these financials did cut their dividend. So this is just one of them that was part of that mix. So still here, could be an interesting one to check out, especially now that it's trending near its 52-week lows. Number 5, and our final one here, we have ticker symbol CHFC. This is the Chemical Financial. It is the third largest bank holding company headquartered in Michigan. The company operates through a single subsidiary bank. Its ex-dividend is on Thursday, the 6th of December, 2018. You'd have to buy this one on Wednesday or prior. If you held it until Thursday, you would receive a dividend payout on the 21st of December. Here, you can see some solid companies again in their price. Price here up 8.8% on average per year. In the orange, free cash flow up 28. In the orange, revenue up 28.6% on average per year. In the red, free cash flow up 48%. And in the green, their net income up there at 100% increase on average per year. So super strong company there. That's very interesting there. Moving down to their 1-year graph here, they currently pay out 34 cents per share each quarter per share. They're currently priced at $46.41. This does put them below that 200-day moving average of $54.88 here. You can see that they tested some really lows here. They were trending pretty high up for the year. Between January and February, they weren't really hit during that downturn. In February and March here, they were hit here slightly. If I were to remove this text, but I can't. You can see here that they traded mainly near their highs for the year before crumbling down here after September. They just fell from $56, $58 all the way down, breaking below what looks to be $44, $43. And they have bounced up now, trading at $46.41. Their current dividend yield, since they increased their dividend from 27 cents and some change to now 34 cents, bumps their dividend yield from a 2.54 to a now 2.93% dividend yield. Their current PE is at a 15.27, forward PE 11.98, which does put them below the industry average there. So price to sales 4.63, price to book for a financial here 1.1. So when charted, it does show the current stock does have a price underneath the yield, which may indicate it could be undervalued at this time. The stock is also above the industry average currently, but I believe after all of the financials, I believe the financials just came out for this one, so their forward PE is actually probably more to their current PE, so that does put them below their industry average. They have had, they are below the S&P 500 of 21.89, below 60% payout ratio at a 34.3% payout ratio. Dividend growth for the past 6 years. Now again, they cut their dividend back in 2012. They had some restrictions put on them over the last 10 years. They've grown their dividend at an average of 1.52%. So back in 2008, they had a huge cut, and then they started raising their dividend back in 2012, which if you start at the top in 2008, include that cut in their dividend, and then where they've increased their dividend. If we were to look at their dividend over the last 8 years, 5 years, it would be a much different picture. But because this is a 10-year average, I guess I should have taken the 10 and 5-year here, but that is there. Price to book 1.18, which is below the 3.0 value where asset-based companies would be considered a deal. Price to sales 4.63, which is above 3.0 where sales and service-based companies would be considered a deal. So that is the company. They currently pay out $1.36 per share each year, grown their dividend 6 years, and had a dividend cut there back in 2007, 2008, and then recovered here 2012 and increased their dividend after that. So that is it I hope you guys did enjoy this article. Hope you guys did enjoy this video. If you guys did, hit that thumbs up button below. If you did like the article, check it out. I'll have it in a link in the description below. Also in the comment section, I'll have a link to the article. That way, if you guys would like, you guys can head over to my website, check it out, go through the article yourself, research some stocks, take a look at their balance sheets, take a look, if one of these stocks look interesting to you, if you want to get an email sent to you every time I release a new article every single week, type in your email there. It'll get you hooked up for that. Now, out of all 5 of these stocks, I think that some of these financials do offer some of the better opportunities. So while JPC, Genuine Parts Company, does have a lot of dividend growth with it, I think it is slightly highly priced right now. Not as high as it was back in January, but it is trading near their highs currently for the past few months. Now, if you're looking for something more of an opportunity buy, I would probably take a look at their balance sheet and what has caused them to drop here as far as price, with ticker symbol CFR and ticker symbol CHFC. So those two financials there, I think this one here trading at a 1.1 price to book would be very interesting. And then also here with First Merchant trading at a 1.4. So check those if you guys would like. Let me know in the comment section below if you guys had to choose one of these 5 stocks, which ones would you choose? Do you hold any yourself? And that is basically it. Quick disclaimer, I am not a financial advisor, tax professional. The information provided is my opinion for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them. So thank you all for tuning in. Hit that thumbs up button below, and I will see you next time. Have a great day. Bye.